experts warn that the crypto market will continue to fall. Investors are bracing for a prolonged decline in cryptocurrency prices, as higher interest rates and the collapse of a widely used stablecoin last week shook investor confidence in the fast-growing but largely unregulated ecosystem. Bitcoin and Ether, the flagship cryptocurrencies against which most other tokens are measured, have already suffered significant losses, falling 33% and 42%, respectively, since the beginning of the year. However, hundreds of other cryptocurrencies and tokens are likely to see reduced buying as global risk-off sentiment pervades crypto markets, from non-fungible token, NFT, speculation to decentralized finance, DeFi, networks. We've been in a bear market for about 6 months now, said Henrik Anderson, Chief Investment Officer at Apollo Capital. It's difficult to predict where things will bottom, but in general, we believe these times are good for dollar-cost averaging. Because of the relative size of the markets, cryptocurrencies were relatively immune to the movements of traditional equity, bond, and commodity markets for many years. The theory developed over time that Bitcoin would be a useful inflation hedge due to its 21 million supply cap, which creates scarcity as demand rises. However, according to Bloomberg data, Bitcoin is now more correlated to the Nasdaq than at any time since 2010, and that index is suffering as a result of higher prices and higher interest rates. The founder of cryptocurrency exchange FTX, billionaire Sam Bankman-Fried, believes the correlation will likely continue as the macroeconomic picture dominates investor sentiment. Crypto markets have mostly stabilized, modulo whatever happens in traditional markets, Mr. Bankman-Fried told Fortune over the weekend, referring to the mathematical operation modulo, which shows the relationship between two numbers. If stocks recover, I would anticipate a similar recovery in crypto. If stocks continue to fall, BTC may follow. In the worst-case scenario, stock investors are bracing for a prolonged period of volatility due to the threat of a US-based recession. They are currently digesting a global macroeconomic picture that includes US policy rate hikes, supply chain issues, chip shortages, soaring oil prices, and rapidly rising inflation in developed economies. The day crypto decouples from a falling stock market is the holy grail for crypto bulls, said Brent Donnelly, president of Spectrum Markets, a foreign exchange trading publication. However, the worst-case scenario in the short run is that the Nasdaq finds a base and crypto continues to fall. Over the last decade, there have been 2 major crashes that have resulted in crypto winters. The first was in 2014, when Bitcoin fell from its peak of $1,137 to as low as $183, an 84% drop, due in part to the collapse of Mt. Gox, a popular exchange. The second occurred at the end of 2017, when hundreds of millions of dollars flowed into Bitcoin via initial coin offerings, an unregulated method of raising capital to build a crypto project. The euphoria drove the Bitcoin price to a high of $19,650 before plummeting to a low of $3,181 in 2018. The collapse of Terra USD, the third most widely used stablecoin, prompted a dramatic re-rating of crypto prices last week, signaling the beginning of a period in which the inherent technical risks of crypto investments are more carefully considered. However, Michael Groninger, co-founder and CEO of Chainalysis, the world's largest crypto data analysis firm, believes that these down periods can help distinguish between the signal and the noise. It's during bear markets that good new technology is developed, Mr. Groninger explained. We've seen people get excited about new technology, and everyone wants to get their hands on it, but it's never as good as people expect. Then there's some disappointment, but it's during a bear market when companies are underfunded that true innovation emerges.